Think of the global economy as the world's weather system, powerful currents shaping financial conditions everywhere. Just as weather patterns can bring sunshine or storms, global trends can create prosperity or challenges for countries and individuals alike. Economists track these global trends, which influence everything from your morning coffee price to your job prospects, the cost of goods, the availability of jobs, and even the stability of your local economy, are all tied to these worldwide shifts. These trends are the sum of billions of daily decisions, creating a vast, interconnected story. Every purchase, investment, and policy choice adds a new thread to this global tapestry. Understanding them is like having a reliable forecast. It helps you prepare. With the right knowledge, you can make smarter choices for your future, whether you're planning a career move or managing your household budget. We're talking about major shifts, like inflation, economic growth, and the rise and fall of national economies. These forces can change quickly, and their impact is felt in every corner of the globe. For example, rapid tech growth changes how we work and shop, while rising energy costs impact everything from transportation to the price of groceries. These shifts can create new opportunities, but also new risks. A slowdown in one country can ripple across the globe, affecting jobs and prices elsewhere. No nation is truly isolated. What happens in one market can quickly influence another. As we look to 2026 and 2027, a few key trends will dominate headlines in our daily lives. These years will likely bring both new challenges and fresh opportunities for people everywhere. The big questions: will inflation cool, or will prices keep rising? How will these changes affect the cost of living for families around the world? Which countries will lead growth, and which will face setbacks? The answers will shape the global balance of power and opportunity. How will this affect your wallet? Will your income keep up with expenses, or will you need to adjust your spending? This guide will break down these forces, showing how the global economy connects directly to your personal finances. By understanding these trends, you'll be better equipped to navigate the changes ahead and make informed decisions for your future. Inflation means prices rise and your money buys less. It's the silent thief in your pocket. Imagine $100 buying 10 movie tickets last year, but only 9 today. This erosion affects everything: groceries, gas, and even your savings. Businesses pay more for supplies and pass those costs to you. Persistent inflation makes saving harder. If your savings grow slower than inflation, you're losing value. It squeezes household budgets, especially for those on fixed incomes. Uncertainty rises. Businesses delay investments. Families postpone big purchases. This cycle can slow the whole economy, making everyone feel less secure. Understanding inflation is crucial to protecting your finances. It's not just about higher prices, it's about planning for an uncertain future. Knowing how inflation works helps you make smarter choices. After years of high inflation, when prices seemed to rise every time you went shopping or paid a bill, many people are wondering what comes next. The big question for 2026 and 2027 is, will things finally cool down, or is this just a temporary pause before another surge? Economists say yes. Central banks' interest rate hikes are working, and inflation should slow. These policy moves are designed to take the heat out of the economy. Prices won't actually drop, but they'll rise more slowly, making life more predictable for families and businesses alike. Your salary is more likely to keep up with costs, and planning for the future becomes easier, whether you're saving for a big purchase or just making ends meet. But this cooling won't be equal everywhere. Some regions will see relief faster than others, depending on local economies and government policies. Developed economies may stabilize quickly, with inflation rates returning closer to normal and consumer confidence rebounding. Meanwhile, emerging markets could still struggle with local price pressures, currency swings, and slower wage growth. The job market is the flip side. High rates that tame inflation can also slow economic growth and hiring, making it harder for some to find work. Unemployment may tick up, making job searches tougher and increasing competition for available positions. Policymakers aim for a soft landing, lower inflation without a deep recession, trying to steer the economy onto a stable path. If successful, we'll see stable prices and a steady, if slower, job market, with less uncertainty for everyone. The key is balance. Cool inflation, but keep the economy moving forward, so growth and opportunity don't stall. Watch closely for how this plays out in your region, as the effects of cooling inflation will shape daily life and future opportunities. Central banks, like the US Federal Reserve and European Central Bank, are the economy's directors, quietly shaping the financial world behind the scenes. Their influence reaches far beyond the walls of their impressive buildings, touching nearly every aspect of our daily lives. Their main tool is the interest rate. Raising it makes borrowing costlier, cooling spending and fighting inflation. By adjusting rates, they can encourage or discourage people and businesses from taking out loans, which, in turn, affects how much money is circulating in the economy. When rates go up, loans, mortgages, and credit cards get pricier for everyone. This means higher monthly payments for families and businesses, which can slow down big purchases and investments. This strategy defined 2022-2025, helping to slow inflation and stabilize prices, even as it made borrowing tougher for many. Now the focus shifts. Everyone is watching to see when rates will come down and how quickly central banks will act. Lower rates too soon and inflation could return. Wait too long and growth could stall, leading to job losses and business slowdowns. Central banks' decisions ripple worldwide, affecting jobs, investments, and currencies in every corner of the globe. For example, high US rates attract global investors, strengthening the dollar and impacting trade, making imports cheaper but exports more expensive. As rates fall, the dollar may weaken, making US exports more competitive and shifting investment to emerging markets, which can boost growth in those regions. These moves shape global money flows and your financial opportunities, influencing everything from job prospects to the value of your savings. Watch central bank signals. They set the tone for borrowing, investing, and economic growth, and their announcements can move markets instantly. Their balancing act will define the next economic chapter, as they weigh the risks of inflation against the need for growth. Stay tuned. Their choices affect your wallet, your job, and your future financial security. The global economy's engines are shifting from the US, Europe, and Japan to emerging markets. Countries like India, Vietnam, and regions in Africa are becoming the new growth leaders. Their young, growing populations create a powerful workforce and a rising middle class. Millions are entering the consumer economy, fueling demand for goods and services. Economic reforms and infrastructure investments make these markets attractive for global business. Companies are building factories and creating jobs, drawn by lower costs and supportive policies. As these economies grow, their demand for resources and technology boosts global trade. A rising middle class in India or Africa means new markets for global brands. The growth of emerging markets pulls the world economy forward, spreading opportunity. This shift creates a more balanced, multipolar global economy. Watch these regions. They're shaping the future. Among emerging markets, India stands out as a potential superstar. With a huge young population, India's workforce and consumer base are booming. The country is shifting from IT services to manufacturing, attracting global giants like Apple and Samsung. This China Plus One strategy means more jobs and a stronger industrial base. India's growth impacts the world-rising demand for commodities and a massive new market for global brands. Its digital infrastructure, millions using mobile payments and affordable data, fuels innovation and startups. Challenges remain: bureaucracy, infrastructure gaps, and job creation. But India's direction is clear. Technology and manufacturing will drive its rise. As India grows, it becomes a new center of gravity for global business. The world can't afford to ignore India's momentum. Beyond India, Southeast Asia and Africa are rewriting the global economic story. Southeast Asia, Vietnam, Indonesia, the Philippines, Malaysia, is a manufacturing powerhouse with young populations and growing integration into global supply chains. Vietnam, for example, attracts massive foreign investment, creating jobs and prosperity. Indonesia is leveraging its resources, like nickel for EV batteries, to move up the value chain. Africa, with 1.4 billion people and the world's youngest population, is the next great growth frontier. Urbanization, tech adoption, and a rising middle class are transforming African economies. Countries like Nigeria, Kenya, and Ethiopia are showing impressive dynamism. Africa's resources, cobalt, lithium, are vital for the green energy transition. The challenge: manage this wealth with smart investment in infrastructure and governance. If successful, Africa's growth could reshape the global economy. These regions are not just catching up, they're setting the pace for the future. Watch their rise closely. World GDP growth may sound abstract, but it directly affects your finances. When the global economy grows, there are more jobs, higher wages, and better investment returns. A bigger economic pie means more opportunities for everyone. Companies hire more, giving workers bargaining power, and often higher pay. If your salary rises faster than inflation, your purchasing power grows. Economic growth boosts stock markets, growing your savings and retirement accounts. When growth slows, job security weakens, and investments may lose value. For 2026-2027, expect steady, moderate global growth. No boom, but no bust. This means stable incomes, reasonable job security, and a firmer financial footing. You may not see dramatic gains, but planning becomes easier. The global economy's health shapes your daily life. Keep an eye on these numbers. They matter more than you think. As we enter 2026 and 2027, the global economy is in transition. The engines of growth are shifting to emerging markets, and stability is returning after years of turbulence. For individuals, focus on three key signals: inflation, interest rates, and the job market. Watch inflation reports and central bank announcements. These set the tone for borrowing and spending. Pay attention to wage growth versus inflation. Real gains mean more purchasing power. Monitor job openings and hiring trends for a sense of economic health. Broaden your view. The rise of India, Vietnam, and Africa creates new opportunities and shapes global business. These trends influence everything from investment choices to the price of goods. Staying informed helps you make smarter financial decisions. The world economy is always changing. Be an active navigator, not just a passenger. By watching these signposts, you can better prepare for what's ahead. Your financial journey is shaped by these global forces. Stay alert and informed.